Good day, everyone. This is Pinnacle Professional College, and today we will be studying public sector accounting. We've had previous lectures on the topic of government revenue, expenditure, and budgeting, and all things in between. If you haven't subscribed to the channel, please do so, because we post videos daily or lecture videos daily that's going to help you to pass your exam and basically improve your knowledge. So let's dive straight into the continuation of our series. Today we'll be talking about chart of accounts, the public expenditure of Ghana, chart of accounts. So what are charts of accounts, right? The name suggests something, A chart of accounts is basically a created list of the accounts used by organization to define each class of items for which money is spent or received in the GL. So a chart of accounts is basically a list of accounts. And this list of accounts define each class of items for which money is received or spent in the GL. So it's very, very important definition. So what you need to know is, a chart of accounts, right? So you have a list of accounts which kind of like tie into a class of items through which money is received or spent, just for identification and proper classification purposes. The chart of accounts is therefore a structured set of codes that provides a framework for recording, classifying, organizing budget data, right? And the chart of accounts is basically a structured set of codes, like what we mentioned earlier, a structured set of codes. And it provides a framework for, number one, recording, number two, classifying, and organizing, right? These are key principles in accounting. And when you want to properly record accounting transactions, you need to provide a framework that is good for recording, classifying, and organizing data. So that's what the chart of account does. It's basically a structured set of codes that provides some form of structure for recording, classifying, organizing budget data and accounting transactions into reports and statements, right? Into reports and statements, because you want an accounting output that can be understood. So this structured set of codes gives the opportunity to transform accounting data or data into reports and statements. It also provides various perspectives of financial transactions and facilitates budgetary controls, right? It provides various perspectives of financial transactions and facilitates budgetary controls. Right. That's what the chart of accounts does. It is also used to organize the finances of the entity and to segregate expenditures, revenue, assets, and liabilities in order to give interested parties a better understanding of the financial health of the entity, the government, etc. Right? So the reason we have a chart of account is to provide some form of structure, some form of organization, so that we know that we are clearly separating expenditures from revenue, from assets and liabilities. There is that proper separation or segregation for proper understanding by interested parties who want to know more about the financial health of the government. So we have two classifications. Number one is the MTEF classification, which was from 1999 to 2011. The MTF simply means medium-term expenditure framework. Then you have the GIFMIS classification, which is from 2012 to date. And GIFMIS, which you might know is Ghana Integrated Financial Management Information System classification. So I'm sure as we go along, we'll understand these classifications a lot more better. Now, what are the benefits of chart of accounts? Now, through the definition, we touched on some key benefits, like, it gives proper understanding, it gives structure to the recording of accounting transactions or accounting data. But let's dive in a little bit more. So the benefits of chart of accounts, number one is that it facilitates identification and control of public expenditure. Two key words here, identification and control. So it helps us to identify public expenditure and helps us to control. You cannot control what you have not identified, basically. So the chart of accounts provide these sets of codes that helps to identify and then control public expenditure. It also ensures consistency in classification of account items for reporting. It ensures consistency. So you would have a consistent classification of items, which helps for organization purposes, proper organization of the accounts. It also facilitates consolidation of financial statements. Now, if you have consistency in place, consolidation becomes easier. So it facilitates the consolidation of financial statements of government. It also facilitates what we call e-accounting and reporting, right? When you have this structure to the chart of accounts, you can easily electronically account for stuff and report. It helps to do that because you have a framework or a structure for recording, classifying, and organizing accounting transactions. It also removes manipulation of account classification to produce misleading information. Because there's some form of structure and identification, it takes out the manipulation of account classification where, people would record certain accounting transactions in, under different classifications. When there's a structure in terms of classification, in terms of organization, it removes those forms of manipulation because you can't just classify transactions anywhere. There's a strict structure that determines that. And so it removes manipulation of account classification and therefore limits the production of misleading information. Now let's move on to segments of the harmonized chart of accounts. Segments of the harmonized chart of accounts. Number one, let's look at institution segment. Institution segment. This segment is used for coding an institutional unit, which stands as an economic entity. So the institution here we are referring to is an economic entity. An institutional unit, as defined in the GFS 2001 manual, is an economic entity, which we already discussed, that is capable in its own right of owning assets, incurring liabilities, and engaging in economic activities and in transactions with other entities. So an institutional unit is basically an economic entity that is able to perform economic activities and transactions with other entities. That's a simple definition. These entities should therefore be treated as separate government units if they maintain full sets of accounts, own goods or assets in their own right, and engage in non-market activities for which they are held accountable, right? So when an entity or a unit or an institutional unit is able to own its assets, incur liabilities, engage in economic activities, then it should be treated as a separate government unit, as a full and economic entity. And that's what we refer to as the institution segment, under chart of accounts. So this segment is basically used for coding an institutional unit, which stands as an economic entity. So the chart of accounts structures the coding in such a way that it focuses on institutional units or economic entities. So the coding is done on that level, on the economic entity level. Then you have the funding segment. The funding segment provides a means to track the source of funding for expenditures within a consolidated reporting scheme. The funding segment provides a means to track the source of funding for expenditures within a consolidated reporting scheme. Right. So what does this mean? What does this mean? It basically means that expenditures are assigned against the appropriate funding code, which is independent from the organizational or program structure. So the coding is done at the level of the funding source. So the funding segment, it provides a way to track the source of funding. That's the key here. The source of funding for expenditures. The source of funding for expenditures. Where did the funds come from for the expenditure to take place? And that's what we mean by the funding segment. The funding segment. It's very, very crucial. So you have the institution segment and you have the funding segment. Okay. Now let's move on to the functional. Let's move on to the functional of government segment. The functional of government segment. Yes. Functional of government segment. This segment provides coding. It provides coding for functional classification. For functional classification of expense to provide a strategic view of the allocation of budget resources between different sectors of the economy. So the coding is for what? At what level? Functional classification of expense. And that's what you need to know. And this is based on the United Nations classification of functions of government. It is a detailed classification of the functions or socio-economic objectives that government units aim to achieve. Right. So what is this essentially saying? What you need to know is that this particular segment, right, or classification, it provides coding for the functional classification of expenses, right? And that's why it is based, we see that primarily in the United Nations classification of functions of government. So the coding is done on a functional level, on a functional classification of expense level. So what are some of the functional classification of expenses? So in the case of United Nations, you have health, education, defense, etc. Function, a particular socio-economic objective that is intended to be achieved. Then you have the organizational segment. The organizational segment provides the basis for establishing the responsibilities for the day-to-day administration of government business. You see, and the structure of the organizational hierarchy is reflected in the series of codes for ministries, departments, and agencies reporting under sector ministry. It's very, very important. So there's a series of codes, right? If you want to understand the organizational hierarchy, it is reflected in a series of codes for ministries, departments, and agencies. Ministries, departments, and agencies who are reporting under the sector ministries. So the organizational segment basically provides the basis for establishing the responsibilities for the day-to-day administration of the government business. So when you think organizational segment, think about administration of government business. Number 5, program and sub-program segments. These segments provide the basis for recording transactions associated with a specific program. So here you are looking at recording transactions for a specific program or even a sub-program, which is usually operating under an organizational unit. Remember, we explained organizational units to be, if we go back to the previous slide, we explained an organizational unit to be basically, an economic entity, an economic entity. Then we move on to activity segment. This segment provides classification of various activities related to specific or special programs, sub-programs, or outputs. So this is an activity-based segment, right? You are classifying accounting transactions or activities related to specific activities or outputs. I'll put it that way, outputs or specific outputs, yes. They also have what we call the location segment. The location segment. The location segment provides geographical location of an institution, organization, program based on established political and administrative districts of Ghana. So here the coding is done based on the geographical location. Geographical location, and it's in accordance with the established political and administrative districts of Ghana. You have what we call the location segment. The location segment. This is very important, very important. Then you have the natural account segment. The natural account segment. And what does this mean? The natural account segment. This is an economic classification which provides the basis for recording specific activity by the kind of transaction by which the government performs its functions, which is this segment provides classification and coding for revenue, expenditure, liabilities, etc. So this is what we call the natural account segment. Now, what do we mean by natural accounts, right? It's similar to what we see in organizations. It's the normal accounts or the natural account segment. And it's basically an economic classification which records activities according to how the government performs its functions. And it's able to record or classify and code for revenue, expenditure, liabilities, etc. Very, very important. Now let's move on to the GIFMIS classification, which we refer to as the Ghana Integrated Financial Management Information System classification. This is the current system of expenditure classification in Ghana. Remember, we talked about it. So this is the current, what is happening now. Expenditures are put into 8 categories as follows. Number 1, we have the compensation for expenditure. Number 2, we have goods and services. Number 3, we have consumption of fixed capital. We have public interest, subsidies, grants, social benefits, and other expenditures. These are the 8 expenditure categories. 8 expenditure categories. Now let's start with the first one. Compensation for employees. Compensation for employees. This is the same as personal emoluments, except that all allowances payable to employees are classified as compensation. So this is basically expenditure that is spent on compensating employees for their work done. Then let's move on to another category of expenditure, which is goods and services. Goods and services. It combines the administration costs and service costs, consumption. It combines the administration cost and service costs. So what we basically need to know here is that for goods and services, this is expenditure that is made in purchasing or procuring goods and services. Then we have consumption of fixed capital. Consumption of fixed capital. What does this mean? It basically measures the portion of non-financial assets consumed within an accounting period. So you have an asset, right? A non-financial asset. So let's say you have a plant and equipment. That's a very good example, right? The plant and equipment has a useful life of, let's say, 20 years. and you've used it for 5 years, that means that you've consumed that fixed capital for 5 years. For 5 years, for 5 years. And that's some form of depreciation. That's some form of depreciation on the equipment. So a typical example you see here, depreciation on motor vehicle, depreciation on plant and equipment, depreciation on furniture and fittings, etc. Then you have public interest. Public interest. Public interest, it comprises interest on domestic debts and external debts, right? So all kinds of interests, whether it's domestic or external. Then subsidies as well, that's also an expenditure. When government subsidizes a certain forms of essential services, that's also expenditure. So a typical example would be subsidies on utilities. So the electricity we pay is subsidized, and so that comes as a form of expenditure to the government. Grants outlays, government outlays to other countries or the local governments. So a government gives grants, and we learned in our previous sections that grants are given out without any requirements for repayment. A typical example would be the District Assembly Common Fund. That's a grant is given out to local governments. Then you have social benefits. Social benefits. This is expenditures on social securities, social security initiatives such as the National Health Insurance, school feeding program, etc. So any initiative that is intended for the betterment of society also will classify as an expenditure. And yes, and that's what we see here as social benefits. Now let's move on to other expenditures. Other expenditures. This may include contingent expenditures and other expenditures which do not fall under any of the 7 groups, right? We've talked about the 7 groups already, mentioned subsidies, grants, compensation for employees, etc. So other expenditures are miscellaneous expenditures which do not fall under the other 7 groups that we talked about. Expenditure control measure general controls include expenditure control measure general controls include, number 1, ensure that the expenditure is lawful, it's a lawful charge against appropriation. Yes, that's very, very important, right? We are talking about expenditure control measures, right? How do we put in place the required control measures to manage expenditures? To manage expenditures, very, very key. How do we put together the right controls to manage expenditures? So some of the general controls include ensuring that the expenditure is a lawful charge. The expenditure has to be a lawful charge. Also ensure that the appropriate approval is sought, right? So number 1, the charge must be lawful. Number 2, we must seek the proper approvals. Number 3, ensure that goods, services, and works are performed before payment. Ensure that goods, services, and works are performed before payment. It's very, very key. This is very, very important. The goods and services are, we need to ensure that they are performed before payment is made. And also ensure that pricing, let's talk about pricing. Pricing is in accordance with the contract, and pricing is reasonable. You shouldn't pay overly high prices for something that is not really worth it. So the prices must be reasonable. The prices must be reasonable. Also ensure that appropriate supporting documents are provided and verified. When you are doing a transaction or you are engaging in some form of expenditure, you need to ensure that the appropriate supporting documents are provided. Very, very crucial. It's very, very important. Number 6, ensure that large payments are done by checks or direct transfers. When you're making a large payment, the principle is you do it by check or direct transfer. Doing it by cash can create some forms of problems, right? So you would want a secure mode of payments and very convenient mode of payment. So for example, if you are spending on some form of capital project, which is going to cost you $2 million, you would likely will not want to do it in cash. A check would be fine, or a direct transfer. Ensure safe custody of all value books. Keep all value books properly. Keep them properly. You need a safe custody of all these books. We are still talking about general controls surrounding expenditures. We also need to ensure that records are maintained for all checks. And for every expenditure that is made, a record must be in place to ensure proper checks and balances. Also, we need to ensure that cash books are updated regularly. The cash book is updated regularly to reflect inflows and outflows. And one key control that sometimes is not talked about is segregation of duties. This is extremely crucial. Extremely crucial, right? So ensure segregation of duties in the processing, payment, and accounting of expenditure, right? So the person who processes the expenditure or pays the expenditure should be different from the one who accounts for it. That's what we call segregation of duties. That's what we call segregation of duties. The person who, for example, authorizes the expenditure should be different from the person who records the expenditure, right? Because if these two individuals are the same, then you can literally authorize an expenditure, any amount of expenditure, and record any amount you want. You can authorize $50,000 and record $10,000 if these individuals are the same. So there should be segregation of duties. Segregation of duties to ensure proper checks and balances. Now let's move on to expenditure loss. Expenditure loss occurs when the government is deprived of the benefits associated with public spending. And what are the causes of expenditure loss? What are the causes of expenditure loss? Number 1, irrecoverable overpayments. So sometimes the government will make overpayments and they can't recover it. They can't recover the amounts they overpaid. Nugatory payments could also be a factor. Improper payments could also be a factor. Excess expenditures. When the government makes excess expenditure, it causes expenditure loss. Then you have fraudulent payments as well. Fraudulent payments. And we would explain all of these. We'll explain all of these to your understanding. Irrecoverable overpayments. It occurs when an excess payment has been made by error and recovery cannot be effected because the recipient cannot be traced or is incapable of making payments. So like I already explained, this is where an excess expenditure is made. And the recipient cannot be traced. Sometimes you can't trace the recipient, or the recipient just cannot make the payment. So it becomes irrecoverable, and that contributes to expenditure loss. They have nugatory payments. It occurs when the government is legally obliged to make payments of penalty for which no corresponding receipt of goods or services has been derived, right? So there are situations where the government has a legal obligation to make a penalty payment. And this penalty payment, there is no corresponding return. There is no corresponding return. There's a legal obligation to make a payment for a penalty. And a typical example that really fits with this is judgment debt. Judgment debt. Judgment debt. Yeah. Judgment debts sort of a payment of a penalty, and it's legally obliged. Then you have improper payments. Improper payments are payments which are contrary to the law. Contrary to the law. They are contrary to the law, but does not constitute any criminal offense. Examples are gross waste, when you waste the money, or you just lavish on expenditure. So for example, you're supposed to do a project that ideally should cost 1 million, but you're spending $5 million on it. That's 4 million is an improper payment. You have excess expenditure. It's a variation of improper payments where payments have been made in excess of approved estimates without the prior authority of Parliament, right? So this is an excess payment which has not been approved or authorized by Parliament. So that's what we call excess expenditure. No prior authority or approval of Parliament in this case. Then you have fraudulent payments. These stem from transactions which involve the use of falsified documents or certificates to steal money or other property. And this is a criminal offense, right? Where you use falsified documents to facilitate certain transactions and basically swindle money from the state. Now let's talk about control of public expenditure. The objective is to ensure that public expenditure produces value for money. That's the objective, is to ensure that public expenditure produces value for money. What is value for money, right? Government is putting down money for some form of expenditure. It could be a capital investment, a project of some sort. The government must get value, some benefits for their money. Expenditure control measures covers authority, approval, payment, and accounting for the expenditure. These words are very, very important. So it's important to understand them. Number one, authority, approval, payment, and accounting of the expenditure. Every expenditure has to go through these things: authorization, approval, payment, and proper accounting. Okay, now let's talk a little bit about the Treasury single act. The Treasury single account. The Treasury single account means it's simply a consolidated bank account. It's a consolidated bank account where all deposits and payment transactions are processed for central government. So this is a bank account that is consolidated, and all government transactions are processed here. So when things like when a disbursement is made, a disbursement of public funds are made, it shall be transacted from this Treasury single account. The name single means one, right? And that's where you can kind of guess that it's a consolidated bank account. A consolidated bank account system where all deposit and payment transactions are processed. Now you have the purpose or the objectives. What is the purpose or objective of this Treasury single account? A Treasury single account serves as a unified structure of government accounts to give a consolidated view of government cash resources, right? So it gives, that consolidated presentation of government resources, which is very, very crucial. It gives that consolidated view of government resources. The second thing is that it also serves as an account into which all government cash including monies received by covered entities, shall be deposited, and all expenditures are made. So you have what we call two things here. Number one, you have the consolidated view, because it's a consolidated account. It gives a consolidated view of all government, resources. And it also provides a single account through which deposits and expenditure are made. Now, what are the components of the Treasury single account? What are the components of the Treasury single account? Number one, we have the Treasury main account. Number two, we have the revenue transit accounts. These are transit accounts for tax and non-tax. We have the revenue hold accounts. We have operational accounts. We have donor fund bank accounts. We have third-party deposits and other deposits. We have foreign mission bank accounts. We have foreign mission bank accounts and any other account that may be designated by the controller and accountant general. So these are the components of the Treasury single account. It's important to remember those. Now, since we understand what a Treasury single account, we know that it's a consolidated account and it gives a consolidated view of the government resources. We understand the components of this Treasury single account. Now, let's explain what a third-party deposit means. So a third-party deposit means a security deposit made by a third-party institution that transacts business with employees on government payroll, right? The name suggests what it would mean, right? So you have third party. So it's basically a security deposit that is made by a third party who transacts business with employees on government payroll. That's what we mean by a third party deposit. A deposit made by a third party who does business with government employees, basically. And then let's talk a little bit about the Treasury single account for local government authorities. The minister may establish a Treasury single account for local government authorities at a commercial bank, So the minister may do that. He has the power to establish a Treasury single account for the local government authorities at a commercial bank. The minister and the governor of the Bank of Ghana shall conclude what we call a service level agreement. So there's a service level agreement with the minister and the Bank of Ghana. So the minister and the governor of the Bank of Ghana shall conclude a service level agreement that specifies the responsibilities of the Bank of Ghana for the operation of the Treasury single account. So the Bank of Ghana would be given certain defined responsibilities when they are operating this Treasury account, this consolidated bank account. Specification of service level agreement. The service level agreement shall specify the use of intraday overdraft of the Treasury single account. That's number one. Then remuneration on a credit balance and charge on a debit balance of the Treasury single account and any other matters. So there are three things here that the service level agreement will specify. The service level agreement, as I've already explained, is basically an agreement between the minister and the governor of the Bank of Ghana around the operation of the Treasury single account, right? Because the Bank of Ghana would be helping to operate this account, right? So the service level agreement will specify three things. Number one, intraday overdrafts, right? If there are any overdrawn balances, they need to agree on that. So intraday overdrafts of the Treasury single account. Number two, the remuneration on a credit balance and charge on a debit balance of the Treasury single account. So credit balance and debit balances on the account, so there needs to be an agreement on that. And any other matters that are necessary for operating the Treasury single account. It's very, very crucial, very, very important. Now let's talk about the Treasury single account and the responsibilities of the Bank of Ghana in respect to the Treasury single account. So what is the Bank of Ghana responsible for? Number one, they handle and transmit receipts, notices, and other transactional documents, right? They handle and transmit receipts, notices, and other transactional documents. The Bank of Ghana is also responsible for handling government checks. They're also responsible for processing of payment instructions. They also process transfers between sub-ledger accounts. The Bank of Ghana would also be responsible for processing refunds and repayments. And as you would know, the Bank of Ghana will be responsible for handling public money held in trust as deposits. The Bank of Ghana will be responsible for keeping records of sub-ledger accounts. They are also responsible for sweeping of balances on zero balance accounts. Sweeping of balances, very, very important. Number 9, the Bank of Ghana will be responsible for establishing online access to transactional information of accounts through a secured portal, right? So the Bank of Ghana, these days, everything is online. So the Bank of Ghana will ensure that it establishes access through a secured portal of the transactional information. Number 10, they provide bank statements through what we call the Ghana Integrated Financial Management Information System, GIFM, at the frequency specified by the controller and accountant general. So they provide bank statements. They report to the CAG, which is the controller and accountant general. They cooperate with the cash management committee in respect of cash forecasting. When they are doing a cash forecast, they have to cooperate with the cash management committee. So the Bank of Ghana is literally like the bank for the government, and anything or similar activities that your personal banker would perform for you in operation of your personal account, it's quite similar to what the Bank of Ghana does for the government, right? So these are some of the responsibilities of the Bank of Ghana in respect of the Treasury single account. So this is where we'll bring this lecture to an end. Thank you for listening. If you haven't subscribed to the channel, please do so, and have a good day. Thank you.